Good morning, everyone. Welcome to Forex daily analysis, Forex trading, everything Forex. So we're about to start the week, the trading week, after a rejuvenating weekend, and let's just kick it off with the dollar because we need to kind of figure out what's happening here so that we can have bias on our other pairs. Okay, so just to recap from last week, so we had the push up from the previous expanding channel support. So previously the analysis was looking more like the structure, like it still had a gap to fill. But as we started developing, I started noticing that this is looking more like a potential inverse head and shoulder. And what I mean by that is if you just pull this to this being the potential neckline, and maybe let's just clear up some of this so we can see more clearly. So if we pull this to the potential neckline formation, and we just look at this like this looks like a shoulder, this looks like a head, this looks like a neckline, and this looks like another shoulder. What can happen from here? Price can either come down and to form the double shoulder, or price can just break outside of structure, lower time frame correction, and continue to the upside. So we'll be really keen to see if price can actually break the neckline, and if it can break the neckline, it can give us some sort of lower time frame correction outside the neckline, something like this, retest, and then continue to the upside. Or the other option is that price can just form a double shoulder. As you can see, we have a double shoulder here on the side, even a double bottom forming the inverse head. So we could potentially see price come down to give us a double shoulder before then breaking the neckline to continue to the upside. So the bias for the dollar now would be, well, we need to first see basically if it rejects and comes down. And just know that this formation to the downside could take the whole week, or if it breaks the neckline. So I think today would be a difficult day to really see what's going to happen with the dollar. We'd have to wait for the break of the neckline in order to confirm a bullish confluence. So for now, the dollar is neutral. And because the dollar is neutral, we're not going to have really clear sentiment on our USD pairs. And as you can see, this was USD SUS that I was holding last weekend, and I closed when price bounced there. Currently it's just playing at the moment in the zone. Looks like it could form some sort of larger time frame correction while it's waiting for the dollar to decide what it's gonna do. Gold, last week we had that move down to the downside, and I can see that gold kind of failed to break to the downside. It's broke back into the channel, and now I think it's just sort of in limbo, meaning it could continue to the upside if this forms a potential inverse head and shoulder. If this forms a potential inverse head and shoulder, then we definitely could see gold being bullish, but I think it's too soon to tell. As it's Monday, we need markets kind of to figure out their direction. One interesting pair is GJ, so I had to go all the way back to the weekly chart just to kind of have a clearer bias on this, because previously it was in a downtrend. But if you look on the weekly time frame, we're actually in a larger expanding pattern. So with this oversight now, we can go back to the lower time frames and we can basically try and deduce what's happening. So since we're in the larger expanding channel and we are in an uptrend, we can definitely see GJ being bullish. As you can see that GJ has broken out of this downtrend. It formed a lower time frame correction, and now it has broke out of that lower time frame correction. Unfortunately, this happened before we were able to even get opportunity at entry. As Monday open now, we just shot right up. So it's not really wise to follow the trend, right? And sorry, not follow the trend, chase the move. And for now we can kind of see that GJ had an impulse, and if you notice after every impulse there needs to be a correction. So now that we had the impulse, we kind of expect that price is gonna form some sort of lower time frame correction, in which we would then have the opportunity to enter at one of these points. So it wouldn't really be wise now that you see this great move to the upside happening. Let's wait for the correction so that we can get the opportunity to get in. As I said, we don't chase the market, we wait for it. So GJ could definitely be more bullish opportunities, but for now we're going to allow this move to correct, and we'll see if we can get any opportunities. So one of the trades that I'm still currently in is US 30. So US 30 from last week, it had a move to the upside, and now when I'm looking at this, it looks like a potential inverse head and shoulders. So if you can see, this looks like a potential inverse head and shoulders, and if that happens, then it gives us more stronger bias to continue to hold this trade to the upside, at least to the top of this channel. Let's just mark this as the next swing point, and you can see if we mark the next swing point, it looks like we could get a potential wedge formation, which could support the theory of the inverse head and shoulder pattern. So US 30 for now, if you are holding longs, just keep holding longs for now up until price shows some sort of bearish confluence or something like that. Euro USD, from last week I said that I wasn't really interested. This week I could also not be interested again because it's not really breaking out of anything. If you can see that it previously broke out of this channel, but then it formed another trend, and this is more like a bullish descending channel. If you look at this, so the bias will be more long, right? But for me, I'm not so satisfied with the long bias. And the reason for me not being satisfied with the long bias is because previously we had this push to the upside. Let me just close all of this so we can see nicely. So previously we had this breakout of this larger time frame correction structure, price push to the upside, right? But now if you look at this, this is the reason why I'm not so interested in Euro USD longs, right? Because we had the first swing point, we had the second swing point, and just like the GU trade that I had other week, this looks like the next swing point. So if you can see that price always corrects off the push to the upside, so I'm more expecting price to give a sort of, or look rather, for the third swing point, which I will then look for a short position to swing all the way to the bottom. But the price is just not presenting itself in that manner. What I mean when I say that, if you see that we're still kind of in this uptrend sort of situation, so up until price breaks out of a zone and confirmed by a retest or something, then we'll only be interested in short position for Euro USD. But the price is not fooling anyone. I know that price must correct, so price does not correct with 3 swing points. We need a minimum of 4 touches, and that is why I will be aiming for that 4th touch. If we can get some sort of confluence or even a double top at the zone, I will then enter a short trade and hold all the way to the 4th swing point. So yeah, I think for now the dollar is not too clear. We'll have to see tomorrow or at the end of today what is the dollar's bias, whether the dollar will give us the double shoulder touch, or the dollar will just break the neckline and continue to the upside.